We end this trading week with a sigh of relief for investors in Asia as markets closed on a positive note. After a rollercoaster ride, Japanese stocks almost recouped all of their massive losses from Monday, a day that brought back memories of the 1987 Black Monday crash. The week began with a dramatic plunge in global markets, with Japan's Nikkei crashing more than 12% on Monday, the worst day in over 3 decades. Panic swept through trading floors as weaker than expected jobs data ignited fears that the world's largest economy, the United States, was teetering on the edge of a recession. Monday's sell-off reverberated around the globe, sending shockwaves through all markets. Well, after the Monday's close, investors took a pause from recession fears after dovish messages from the US Federal Reserve. Japanese stocks rebounded strongly on Tuesday, marking the largest intraday surge since October 2008. On Thursday, fresh US jobs data soothed concerns that the US economy could tip into recession, bringing a painful week to a positive end. The S&P 500 marked its best day since 2022, advancing 2.3%. Meanwhile, the Nasdaq surged by nearly 3%. Well, let's get more on this now with Nadia El-Bilassi. She's a senior market analyst at Equity Group and joins us now from London. Good to have you back with us, Nadia. What a difference a few days make. We saw a record plunge in Japanese stocks on Monday, which sparked that global sell-off. They've now largely recovered, but tell us more about what has now eased investors' concerns.
Good morning. Thanks for having me. So yesterday we had jobless claim data that came in a positive state. There were less unemployment claims filed than expected, and this triggered a sense of positivity in the markets as they welcomed the job labor market data that was the opposite of what we saw last week, Friday, from the non-farm employment claims that were much lower than expected. So this kind of eased investor concerns. We saw that the topics, we saw Japanese indices, and we saw Asian markets track Wall Street positivity overnight and cooled expectations of a recession, which is the main reason as investors saw the what we call now a Black Monday again, followed by the carry trades that were closed off as well on Monday to support other positions in the stock markets from the end.
Nadia, we know some stocks have fared better than others. The so-called Magnificent Seven, which includes the major tech players, lost more than $650 billion in market value in just a matter of days. The AI pioneer Nvidia, which had seen eye-watering gains over the last 12 months, was particularly hammered this week. Why the nervousness around that and other tech stocks, do you think?
I think tech stocks, just like cryptocurrency, closely tied with the risk sentiment. What was supporting tech stocks recently was earnings, and now that we saw kind of uncertainty towards their forward guidance, or that they're slower in terms of the growth rate compared to Q2 and Q1. So this is another thing that really impacted the tech sector, and also obviously closing on the carry trades from the end to support the risk that they took in terms of tech stocks when they're clearly overvalued, especially companies such as Nvidia and Magnificent Seven, overvalued stocks being really risky in the markets. There had to be a pullover or a pullout somewhere. And I think this is why investors still remain cautious when it comes to tech stocks. But this could be supported later by more rate cuts and by better economic data. However, if we do see weakness and more economic data, this will not translate well to technology sector.
Okay, Nadia El-Bilassi, we'll leave it there for now. Great to get your analysis as always. Thank you.
Thank you.